China has issued its biggest ever cash injection for the economy as it looks to stabilize amid the rocky COVID reopening and ongoing geopolitical tensions with the United States. So if you're an investor looking at China-based companies trading in the US, what's the outlook? Yahoo Finance's Ines Ferre has the details. Ines, what are you watching?
Yeah, Rochelle, well, China's central bank has been adding liquidity into its financial system. In fact, it's been doing this through what are called reverse repos. So what are those? Those are basically short-term loans to banks. And it recently added $121 billion. That's its biggest one-day action on record. And this is important because this is in order to keep loans going. It's in order to sort of grease the wheels of the economy as China's economy reopens. And the whole liquidity issue has been important recently because Bank of Japan recently bought a record amount of bonds in January, and that helped with liquidity in the worldwide system because you have a note from Citi talking about $1 trillion that's been added into the global system in the last few months. And $1 trillion swing can be up about around 10% swing for stocks, or that can mean a 10% downfall for stocks, depending on which way that goes. And so if you take a look at a year-to-date chart for the S&P 500, by the way, that January spike that we saw, that rally that we saw in the markets, part of that, economists have been attributing this to that increase in liquidity in the markets because of China, because of the Bank of Japan. But let's get to Chinese stocks because that's what we're talking about right now and what the impact that these have had. Now, today you are seeing pressure on these Chinese names. You also are looking at pressure on technology stocks as a whole. So these are following suit as well. But if you take a look at a year-to-date chart, you can see some of the gains for these Chinese ADRs. And if you look at a 2-month chart and even a 3-month chart, you can see the rally that these Chinese ADRs have had. Well, some analysts are now saying that there was some low-hanging fruit that was taken. And if you didn't buy into that rally or when that rally was just starting, you probably missed the boat for now because the next leg up for these Chinese ADRs is really going to be slow and gradual, perhaps, because you had this rally as this change of policy was taking place where China ended its COVID-19 lockdowns and it was reopening the economy. That was a big change in policy. That sent stocks higher. So now it's a wait and see for the next leg up for these, because as you mentioned, there are tensions going on with the U.S. and China when it comes to semiconductors. The Chinese housing market is still depressed as well. So it's a wait and see game. Rochelle?
Indeed. Great stuff there. Ines Ferre there for us.